also see a trigger of a range when a trend line is broken. So in this particular case, you see a trend line being drawn in your chart. A trend line is a line that follows a trend. We normally draw it by connecting the bottoms of a chart in an uptrend, and we connect the tops of a chart in a downtrend. A trend line is a tool we use to be able to give us a gauge to see whether the trend is intact or not. Once a trend line breaks, it tells you that that advance you're seeing has stopped. Okay? And as the trend line gives you that signal, more likely, like I told you earlier, an uptrend will go sideways first before giving you a new decision to either go higher or go back lower. So a trend line break is a good exercise to check. If some of you know how to use moving averages, you can replace a trend line with a moving average. Now, moving averages may be drawn in various day sizes. And the ones that I've pointed out over here, we have a 20-day and a 50-day EMA, or exponential moving average. If you notice, they kind of mirror where the trend line is. And if the price attempts to be able to break below it, just like you see in this area here, that means, just like a trend line break, the moving average break can tell you that the trend has slowed down and it's now going into a range. Another thing that you can also do with a moving average to be able to tell you whether your market is ranging or not, remember a moving average, the keyword average. So if I have a sideways moving market, and I have this average coming along with me, where should an average price be in a sideways range? Where should an average be in a sideways range? At the bottom, at the middle, or at the top? At the middle. So when you see a range, you will automatically see the moving averages are starting to flatten in the center or near the center of the range, and you see prices going above it, below it, above it, below it, above it, below it. Now you know you're in a range too. Now remember, we're teaching you how to notice the ranges, because if you don't know you're in a range environment, you're going to be whacking momentum style in a flat market. And that's something that you have to make an adjustment right away. Because believe it or not, more people lose more money in a sideways range than in a decline. You want to know why? Because when the price starts to fall, matatakot ka na, ibebenta mo na yung position mo. In a sideways range, you're still doing this. And you're hoping for prices to be able to resuscitate itself. Some of you, of course, are trying your best to buy and sell, but maybe if you don't know what the typical rules are, you have a hard time. And the losses you take in a sideways range is graduated also. You don't take big losses in a range, it's tiny losses. But you do 2, then you do 3, then you do 4, then you do 5. After the 5th, you're going to say, ayaw ko na. And you never take that money back until you engage into a new trade. And last indicator you have that the range has or is in session is when all your momentum or swing readings are all starting to prove quite erratic. Your MACD, for example, if some of you know how to use this, the MACD you see here on the bottom, look at this. Buy, then almost immediately sell. Again, buy, almost immediately another sell. And you say, if I'm following this indicator, I'm not going to make money. So the minute a momentum reading starts to go, erroneous, it's because the market it's trying to be able to fathom is not in momentum mode anymore. It's sidewards. And so I go to great lengths to be able to do this so that you know and you can identify when a market is ranged. Now that you know a market is ranging, you know already what you have to do. Aggressiveness goes down. I should be buying low and selling high. I shouldn't be chasing prices anymore. And now you've much fixed a lot of the problems that you normally encounter in a market environment like this. Now you guys have been given an exercise sheet. Okay? Now, inside that sheet, I put an example of a chart there. So this is AGI, which I have up front. Now, I'll ask some questions for you. Try to be able to put your answer down before I give you the answer. All right, so I have a chart of AGI here. Now let me just present the facts. A trend line was broken here. The price is standing below the moving averages. The ADX is reading at roughly 25, so right smack in the middle of that threshold I gave you earlier on. And if you look at the MACD reading right now is in sell mode going below the zero line, which is indicating, it looks like I'm heading toward a corrective drive here, possibly into a new renewed downtrend. Now my question is this. Will AGI likely rally or range? So just study the facts first. Just look at the big picture. If I were to take all the lines out there, just look at the price chart first. Is the trend up or down? Up. Okay. So remember, your bias has to be in that direction. So I'm in an uptrend, but I'm taking a pause. But now, will this be a long pause? In other words, will a consolidation come out or a range? Or do you think this has the capacity to be able to recover? I guess that's the question. Given the indications now you add to this chart, should be able to give you a better assessment of what is to happen in this. Do you have your answers in? Okay. So I put ranged but up. Why did I do that? Now remember, it looks like you are in a corrective movement here, and that's something we're going to have to do, and that's the reason I say this is more likely going to range. But the bias of your trend is still underlyingly clear. You are still in an advancing swing here. Now earlier, in my talk earlier on, I told you normally corrections, when they normally carry themselves out, will come out in three swings. Normally what is known as an A wave, a rally B wave, and a C wave. After a 1, 2, 3 move, normally corrections end, and then now your stock price can normally attempt to be able to recover. I think that's what's going to happen over here. Now the reason I have to be able to be a bit more defensive, if not, I could have shown you just straight up, but I couldn't do that because the indications below are telling me, no, this cannot be that strong. Your momentum is not that strong. Your MACD is telling you to worry about it. So there might be more range action here before that. Okay? But clearly, this is not telling you this is going to go to a downtrend. Okay? That's not the indication here at all. What does it need to do to avert a ranged situation? So in other words, what should the price do to be able to tell you, nope, this is going to rally well already? What do you want the price to show you? Now remember this basic lesson, okay? When you're thinking of something to do in the technical world, it works this way. If the trigger for you to do something is no longer there, that means you stop what it is you're doing and you change your tactic. For example, if you see a sideways pattern and you see prices rupture and they break down, what are you supposed to do? Buy or sell? You see a pattern and it breaks down. What are you supposed to do? Buy or sell? Sell. If it goes back in the range, what do you do? Correct. Keep that question mark in your head. If it finally goes above the range, what do you do? Okay, so now you guys are saying buy. So you see, you're simply working on a trigger response. So the same thing here. You're feeling worried because you see a trend line break. So I ask you again, what do you want that stock price to do to tell you more likely it's not going to range anymore and that it can continue to rally? The answer? You want the price to go above that trend line to tell you that it's recovered that point of weakness and that more likely you're going to see a recovery back to the previous high. That's the earliest you will trigger a buy. Okay? And you'll have to treat that particular type of condition that way. I think you know the answer to this. Unfortunately, they made us give all our presentations several days ago. So you have a stock here that you know what's about to happen because you saw what happened in the last 2 days. This is BDO. The question here is, will BDO break out of its range, keyword, durably? Now, will it break out? Yes, it did. As you know, BDO went up to 142 pesos, closed somewhere 140. So it's still above that range. But the question I'm asking you is, will it stay there or will it go back in? So again, look at all the indications that you have. So you will see here, your ADX is below 25. That means you're in a weak momentum environment. Your MACD is actually giving you a buy signal. So that means, should I have bought the breakout? Yes. Should I anticipate that BDO is going to go way over? That's going to be the next question. So in terms of the first question, yes. Second question, if it does break out, will it break over 142? That's the high that you see in this area up here. So as it pushes out here, will it go over this high? And it says here as an answer, will it go above there? More likely, no. So what will happen is it'll hit that area and you will encounter resistance and you will see prices attempt to be able to move sideways. Okay? So how would I know that? That this is where momentum comes inside. You see what happens since you know what the trading environment is, and then you can apply that to that particular type of context. If I was in a momentum environment, in other words, the market's climbing up very fast, the answer to this would have been buy on breakout, buy after the next high, and buy again, and buy and close your eyes until you cannot buy anymore. I don't know if some of you have experienced a momentum market, but believe me, it's phenomenal. It rarely pulls back. And if you don't take it aggressively, you will never be able to buy the stock. And you're going to wait there. You're going to say, come on, correct. Ayaw talaga. And then it moves up, and you're waiting there and says, what's going on here? And as it moves up and up and up, you're just going to find yourself, oh my God, everybody else is making money except me. And finally, on the day that you convince yourself to buy, why are you laughing? Oh, it's happened to you. That's when the correction comes. Because you're the last one in the game. And when everybody, Tom, Dick, and you has finally bought, that's the time the price will adjust. I hate to tell that reality, but that's what happens. So try to be early into that particular stage, especially if you're in a range environment like this.